hey guys, so we are here in the Alphabet City. It's a very historic region of New York. In 1970s, it looked totally different. It used to be very seedy place and a lot of crime, different issues going on. It's a totally different phenomenon now. And you see, it used to be that people used to say, if you're at Avenue A, you're all right. If you're at Avenue B, be careful. Avenue C, you're crazy. Avenue D, you're dead. So that's how rough this neighborhood used to be. But now, it's like really developed, very nice area of New York. And people say if the change like this was possible for the Alphabet City, it's possible for any region. So what's the connection of the Alphabet City and tax? I want to make, since we talk about Alphabet City, avenues A, B, C, and D, I want to make a connection to alphabet soup of tax, different terms, different taxation terminology. So letter A. Letter A, my favorite there is arm's length transaction. So lately I've been dabbling in boxing a little bit, and I really like that term in taxation. Arm's length, you got to keep somebody at an arm's length. So in taxation, it means it's a market transaction, not between related parties, but on truly market terms. Then the second letter is B. And B, in taxation stands for basis. It's the most important word in taxation, basis. But you notice it's B, it's like B dense. So I really love it for that reason too. So B as a B dense and B as a basis. What's your basis in this entity? It's especially relevant for S corporation. Then we get to the letter C, and we can talk about such doctrines as constructive receipt doctrine, cash basis, and then we get to letter D. We can talk about dividends received deduction, depreciation, which is especially relevant for the real estate guys, and then we get to letter E. And E is interesting. That's one of the topics that I'm going to cover today, because E I consider the second most important term in taxation after B, basis. And E stands for ETA, effective tax administration. And when we talk about ETA, or effective tax administration, it means that the taxation should be accomplished in the just and fair way, meaning that taxpayers have rights. So we have the Bill of Rights, but not many people know about the taxpayer Bill of Rights. So there is the Office of Taxpayer Advocate, and they really propagate and advocate for that each taxpayer knows his rights, meaning that the taxes should be assessed fairly, that people have the right to appeals and can appeal their taxes. So we'll submit the link below this video so that you can read the entire Bill of Rights. But it's very important so that each taxpayer has rights. So the more educated you are about your rights, the better you can defend yourself before the tax authorities, the more informed you will be. So we talk about letter E. So the goal is to talk about each of the letters in the alphabet, but for the sake of time, I'm gonna skip to some other very important concept with the letter S. So S is substance over form, meaning that in taxation we look at the substance rather than a form of transaction. And another very important doctrine is STD. And that's not what you thought of. We're not talking about STDs here. In the context of tax, it's step transaction doctrine. Meaning you can have different steps and you can say, oh, this step is not related from this step. But the tax court is going to look at all steps individually and in the aggregate to see what tax purpose you're accomplishing, to make sure that this transaction is not purely tax motivated, it actually has commercial substance, and look at the entirety of all these steps and not necessarily individuals. So hence STD. step transaction doctrine. So we covered a few letters. We covered A, arm's length. We covered B, basis, and a B dense. We talk about D with we talk about C with cash basis and constructor receipt doctrine. We talked about D with depreciation and dividend receive deduction, and we zoned in on E, effective taxes administration, and especially from the standpoint of taxpayer bill of rights. So that's a brief overview, and the focus was to make you aware of ETA, effective tax administration, because sometimes you can find yourself in the situations where somebody became a subject of some scam, and he was because of that scam he lost a lot of money, and yet the tax administration is not fully aware of that and is still pressing certain charges against the taxpayer. So in cases like that, the taxpayer can take advantage of ETA, effective tax administration, and review the taxpayer bill of rights, so that you can be informed and take advantage of your rights to really be informed citizens, especially from the tax perspective. Thank you guys, and cool bees.